Thanks for joining us for the executive series today. I'm talking to Jirko Zuvela, who is the managing director of Argosy Minerals. Jirko, it's good to talk to you.
Thanks, Tom.
Particularly at the time when there is so much going on in the lithium space. It really is the hot button topic of the moment, isn't it?
It is definitely, and what we've seen over the last couple of months is the Chinese being very aggressive in taking up product of lithium for their electric vehicle plans. It's basically becoming a revolution, Tom.
Is that the tipping point? Because we've heard any number of countries in recent months talk about phasing out traditional internal combustion engines for cars in particular, France in particular,
Yes.
China
Yes.
as well. Has that been what's gotten everyone moving aggressively into this space?
Definitely, and what we've seen here, even in recent times, with other companies, it's not only the battery manufacturers that are involved in product requirements, it's vertical integration from the car manufacturers. We've seen the big car manufacturers, the Chinese, the Europeans, move into securing supply of the lithium product because they want to be vertically integrated and they want to be involved from the mine stage to the end user stage, which is putting those electric vehicles into operation.
Okay, why don't we talk a little bit about the demand supply equilibrium, because we hear a lot about the supply side, but what sort of demand are you looking at when you look at the next decade, for example?
And that's the big question. That's the $64 million question, Tom, because it's very small industry up until recent times. It's this revolution that we're seeing that we probably haven't seen in any other commodity at any other time in history. And the exciting part is that it's not just the Chinese, it's not the Asians, it's the Europeans. Everyone is going down that electric vehicle path. Battery storage, obviously pollution is a big issue in not only China and Asia, but Europe as well. And the governments and the countries themselves have to go down that path. And no one really knows where that demand's going to finish up. But what we see in the next few years is the current supply production is not going to be enough to meet what these battery users, these vehicles are going to need over the next few years. So at the moment, the industry produces about 200,000 tonnes, or it did last year. There's talk that it could go to 1 million tonnes in the next couple of years, which at the moment, the demand or the supply side is just not moving quick enough.
Okay. Now, there are two distinct lithium producers. There are the hard rock and the brine. You're in the brine camp. Tell us what the difference is between the two.
Yep, so with the hard rock, they produce from a spodumene, which produces a 6% lithium concentrate. So effectively they're producing a low-grade lithium product, which then goes to China to get converted into a lithium carbonate. Whereas the lithium brine producers, which have effectively been producing over 50% of the world's lithium for the last 30 years, and they're obviously lower cost operators, and the reason why they've been the major producers, they produce an end product, an industrial or a battery quality lithium carbonate product or a lithium hydroxide, which goes straight into the battery. No conversion, it's all processed at the plant to produce the end product.
Okay, there's a longer lead time, obviously, with the brine product,
though? Not necessarily. With our process, we've had to construct some ponds. Generally, you need to have a cycle of evaporation, which is generally a 12-month cycle. So you have that lag time, but once you've started, you then got continuous concentrate being produced from those evaporation ponds. So it's no different really to mining when you're in designing, construction. You generally have a 12 to 18 month window for hard rock mining, whether it's lithium or any other commodity, to get into operation. So it's effectively the same sort of timing to get into production.
Okay, now give us a sense of the Rincon project. What are the hallmarks that are most impressive about this?
The Rincon project is the Rincon Salar is one of many salars in Argentina and Chile, which forms a lithium triangle, which is the world-renowned area for lithium production. The Rincon Salar is a salar that is one of 3 halitic salars in Argentina. The other 2 are Hombre Muerto, where FMC have their operations, and Olaroz, where Orocobre have their operations. So we've selected the Rincon project predominantly because our joint venture partner and chemical processing expert, Pablo Alaralde, suggested that is the best location to develop a project. And Pablo's experience spent 15 years at FMC at their Hombre Muerto operations, developing their processes, producing patents for their processes. He's previously produced lithium carbonate from from the Rincon Solar back in the early 90s at a laboratory scale. So he feels very confident that he understands the nature of the brine, the chemical composition of the brine, to successfully produce lithium carbonate from that project.
Okay, and you're aiming to be producing by the end of the first quarter of next year. How well is that process going?
Yes, very well. We've obviously had to raise a little bit of money. We started pond construction works for stage 1 back in February. We completed those ponds in April. We've been concentrating the lithium brine since then. That concentrate will be ready for processing early next year. We're currently building our plant, which will, the stage 1 lab scale plant, which we'll have completed by the end of the year or very early in the new year, and then we'll be able to transport that concentrate to the plant to then process, with the aim of having first product out the door by the end of March next year.
Okay, and you mentioned the raising. You raised $15 million. How well is that going to see you through that process?
So stage 1 is fully funded, and we're working on that. With all the interest in lithium, as we discussed, Tom, we've had to fast track our development strategy, which is commencing stage 2. So we commenced stage 2 works, additional ponds, evaporation ponds, and also drilling works in the last few months. And we expect to have the initial stage 2 ponds, an additional 10 hectares of ponds completed in the next few weeks, which will add to our capacity to have concentrate to increase our production profile next year. So we're very hopeful that with the plant that we're building, that it will have capacity to produce about 500 tonnes per annum from March quarter next year, and those additional evaporation ponds will allow us to meet that target.
Now, obviously for investors, another important aspect of this equation is offtake agreements. Where are you at the moment in relation to those sorts of discussions? Because you've had a hiccup in recent times.
That's right. So we agreed a deal with a Chinese party, which unfortunately didn't proceed on a subscription equity basis. However, the offtake agreements were independent and binding and unconditional. However, if there is any reason to, or the Chinese party is not looking to carry on with that, we're happy to meet our obligations. However, if they've changed their mind, we'll work together with them, work out a successful resolution, and really what we've seen in the last few weeks is an opportunity now with prices continuing to rise for lithium carbonate and more interest given the electric vehicle manufacturers have finally stepped into the offtake space. We feel that over the next 3 to 6 months, not only can we replicate the previous arrangement, but we may be able to find a bigger partner who will potentially be able to work with us for offtake for the stage 3 commercial operations in the future and help fund the project development to full-scale commercial operations.
Okay, we look forward to following the story with you. Thanks very much for your time today.
Thanks very much, Tom. Really appreciate it.
And thanks for joining us for the Executive Series.